If you enjoy this content, please take a moment to rate and review it. Your feedback will greatly impact our ability to reach more people. Thank you.
Well, not much going on in the news right now.
Yeah, it's kind of slow. Wow. Every 15 minutes is another political something, or I don't know, lots of news going on.
Yeah. Fast acting. Trump transition team in full effect. Every day there's a new appointment announced, or some type of initiative that's going to happen or not going to happen, or people saying, "Oh wow, that's a good pick," or "Wow, that's WTF."
Right.
It's definitely entertaining. How things going other than that?
Going well. I mean, the deal. There's a lot of really interesting. I'm starting to see companies that are using AI to get a lot more done faster, better, more effectively. They need less money, so that's kind of exciting for new deals. It makes me think the existing portfolio needs to, catch up quickly.
Sure.
But I think good. Overall good.
Good. We had the news about Fund 2 come out.
Oh, right. Yeah.
Come out this week.
Yes.
So, it's good. We're in business, which is great. And we can join you in now looking at new deals.
Yeah,
we haven't looked at new deals in over a year.
Yeah.
So we can join you in looking at new deals and, seeing what's out there. I'm excited to take a fresh look at the market today. Still think there's a ton of exciting things, but also a little bit, you kind of want to wait until we maybe get to February or March to kind of get a sense of where things are going. Because they are shifting quite a bit, quite quickly.
Yeah.
Yeah.
And then the other thing that's not really health related is the crypto market is just crazy.
Yeah.
Now. I mean, every day it's a new thing.
Yeah.
So be fun. We've been watching it for long enough to now get to watch new people. At Thanksgiving, there's going to be a lot of discussions about what is this thing.
I mean, it's 2024.
Again,
how can we still be having what is this thing conversations,
because
right?
all these new people coming into the market. I mean, I think, the number going up attracts people like, gosh, it's almost $100,000.
Yeah,
so,
number go up. I mean, it seems like magic, right? It's like, let me just watch my 80,000 turn to 90,000.
Right.
90 turn to 100.
Yeah.
Yeah. It's, I don't know. I think that's been a little bit split for me. It's been both fun to see crypto have its day after being in a winter. And I hope that also ends up being a little bit of foreshadowing for what we're going to experience in the VC industry, because I think they're related. They're not quite the same, but they are related in terms of how the regulatory environment really locked up value for the crypto asset class. And at the same time, I bemoan the blind spot of the Democratic Party to not see this coming before.
That was a complete unforced error.
It's I feel like I don't want to talk about it anymore, but every time I think about it, it's just like, how dumb could...
Yeah, and why do you want to pick on a group that has a whole bunch of money they'd like to get to have regulations created?
And they're smart.
Yeah, yes.
Once they realize the game is political, they're just going to start playing politics.
Right. Yeah.
Anyway, you put together a good show that we got to actually focus on. So let's dig in. Starting with the economy. So Powell had a conversation when we were recording last week.
Yeah, that's right. I think we were recording as he was doing this talk.
Yeah. And what's the...
So basically he was talking about how the economy is growing really quickly, kind of post-election. There's a lot of financial assets that are up.
Yep.
There's jobs that are being created. There also are layoffs, but he focused on a lot of positives around the economy.
Yeah.
And then he didn't say exactly, but really kind of telegraphed that there's no need to rush to more rate cuts, and maybe they won't cut in December, but he didn't say that definitively. He just kind of floated on the table that they're not going to automatically be cutting every meeting.
When's the next job number coming out?
I don't know. It's probably first week in December, be my guess, when it comes out.
Yeah.
There'll be an inflation number and a jobs number before the next meeting.
Yeah. So I bet he's really going to make a decision based on that job number. I mean, he was able to...
And I think inflation is going to be up again. we'll see what happens. But
maybe, but the jobs number, because I feel like August and September, everyone was really focused on the jobs number, not more than inflation. It's just like this jobs number is getting out of control, and I haven't heard that much about it in October and November. I think part of that is because of the election, just taking all the oxygen out of the room. But we're going to be able to return to a little bit of focus on how we're doing from an employment perspective in December. So that probably will influence whether or not he does 25, because 25 basis points it's pretty harmless, quite frankly. Either way, I think the bigger statement would be pausing and doing nothing or going 50. I think there's almost no chance he does 50. There are people screaming for it actually out there. The risk on folks are getting a little scared that, inflation going back up, you're going to pause. But I also think when you look at all the numbers, you look at crypto, you look at the stock market, the Russell performance, I think people kind of think the days of the Fed sort of driving whether or not risk assets are going to, grow or attract new capital is kind of over. To your point in last week's show, the correlation between the Fed fund rate and the 10-year yield on bonds is like it's disconnected. He's not having the effect of this drops, that drops, right?
That's right. I think he lost a little credibility or influence on the bond market by doing the 50 right at first. I mean, I don't know. I feel like it's probably a balance of risk between inflation and full employment. So having a cautious, we'll see how the data comes out, is probably healthy to do.
Next story from Bloomberg here, talking about rent inflation won't ebb until 2026. Obviously, rent is kind of a sticky thing, generally speaking, 6 to 12-month leases. So it's pretty durable. Once it kind of gets set in, the cycles don't unwind very quickly.
Well, maybe scroll down for people that are watching. There's a pretty good chart in here right there. The way they calculate rent is, kind of artificial. And so the yellow line is what they have in their calculations. And then the black line is if you were to sign a new lease, like right now, growth in cost of rent is. And so, it's done on a lag. The Fed does that intentionally. But it's a pretty big component of CPI. So it's going to make inflation sticky higher than the Fed wants it to be. But we've been talking about that for a while. I don't see it getting to 2% almost ever for a while.
No, but it's part of the backdrop of next year. Inflation is very meaningful to health systems and labor. Rent is likely to be how people pay for shelter, large percentage of the workforce for health systems. And it's going to be the backdrop for all the markets we're going to be tracking next year. So Powell's already said he's going to finish out the rest of his 2 terms. And so while I don't think it plays the role that it played, the beginning of this year and certainly, most of last year, still an important backdrop for us to be tracking.
There's no question inflation is really important to health systems, but to everyone, really. I don't know how much the Fed can control it.
Moving into VC markets, TailorMed raises $40 million for medical cost assistance and exclusive from Axios.
I really like this deal. We didn't get to look at it, but it basically is helping with the out-of-pocket sort of patient portion of a hospital or doctor bill, which, it's the biggest cause of personal bankruptcy. It's hard for a lot of people to meet that, especially when you need co-insurance. Unfortunately, not a lot of people understand co-insurance. So they think they have great coverage and then they don't have great coverage and they get hit with a bill. So this firm is sort of, one, collecting those people and then offering them either programs that are already out there that they don't know about where they can get assistance, or helping them spread the payments out over time. There's been lots of these before, but this one seems like it's put together pretty well. And there's a bunch of health systems that have been helping stand it up. Of course, they want to get that source of payment, but they don't want to do it in a way that is challenging to the patients or causes bad press, which both have happened before.
I have a lot of respect for the founders behind this deal because it's one of those kind of boring, not super tech deals.
Yeah, right.
You know, how do we just connect people with the resources that they don't know are available to them that can help them in sort of a time of need? It's a definite win-win. It's great for patients to know the options that are available to them. Because here's the thing: once you get hit with a bill, you're in that situation right now. How you figure your way out of it is an entirely different deal. But the bill is real. It's a real thing.
And the challenge is you already typically have gotten the services. So
that's right.
There's no choice on what to do.
That's
you
right.
already have it. Yeah.
That's right. And so just making people aware and connecting them with all sorts of options is really very cool. Very cool. The City Impact folks are in this deal, and I'm co-invested with them on a deal. They're really smart healthcare folks. So best of luck to TailorMed. Yeah, I agree. Good looking deal here. Zarminali Health scores $40 million seed from General Catalyst, another exclusive from Axios. This is a pediatric health startup and kind of multi-specialty, deep on tech, in-person clinics offering primary and urgent care as well as telehealth and messaging for non-urgent questions.
Yeah, this was a really surprising seed deal in my mind for two reasons. One, it's $40 million seed deal. Two, pediatrics is a complicated and challenging place to make money.
Yeah.
I'm looking at a deal, but it's a very specific deal in physical therapy in early childhood interventions. Doing all pediatrics in a multi-specialty group is a lot. Maybe that's why they raised the money. But then they're also going to 30 states right now. And it's just ambitious. General Catalyst is, if nothing, they're not ambitious. They're ambitious.
Incredibly ambitious. Yeah. Incredibly ambitious. I don't think there's anyone more ambitious out there than them right now.
Yeah,
you know, really committed to putting true risk capital
in healthcare. There's no question.
In healthcare, and with the clarity of we're going to change the way the system operates.
Yeah.
You know, so for anyone who says that venture capital cannot actually do that, I think GC is trying to. It's a big, bold bet, but I got to say, the more they do this, the more I like them.
Yeah,
you know, the more they do stuff like this, I'm like, this is pretty cool. We are not, we don't have a capital backing to do these kinds of deals. Right. We have to play it much more safe. But they've got the assets under management, so it's pretty cool. All right, smart ring maker Oura, and I've been an Oura user for, I don't know, 7-8 years now.
Yeah, a while. Yeah.
Picks up $75 million Series D and Inc. strategic partnership with Dexcom, but that $75 million came from Dexcom.
Right.
So, you know, I don't think that's like a super big deal for Dexcom writing a $75 million check. And at the same time, that's a big venture check.
Yeah.
You know, Oura is expecting to see their annual sales double this year to roughly $500 million. The company is profitable.
Yeah. And it was priced at $5 billion. So, I mean,
that's pretty good.
Yeah. Worth talking about because Oura is already a big player in the wearable space.
Yes.
And I like the ring. I don't have one, but I like the ring kind of use case. It's easy. The long battery life. You could just wear it and forget about it.
Yeah.
So I think it's good. And the Dexcom partnership, I think, makes a lot of sense. I mean,
well, Dexcom is a legitimate medical device company.
Yeah.
Like not a consumer health and wellness wearable company.
Right.
And so to me, especially as someone who's been an Oura user and watching them over the years kind of slowly progress towards really becoming more of a healthcare device, but never losing their consumer roots.
Yeah.
This to me is very interesting because it's like, okay, they're already profitable. So now what are they going to do with that 75 million, right? You know what I mean? If you're already doing $500 million in revenue and you're profitable, this strategic infusion is for a purpose and, you know, likely to take maybe a new version of your device into the true medical device realm. You know, we talk about sleep all the time and how subpar sleep studies are and no one enjoys them and all these kinds of things. I mean, if they can really get into the healthcare market of sleep, that could be a really, really interesting thing.
Yeah. And then I think there's also a chance they will innovate around the ongoing chronic care management of diabetes patients because that's where Dexcom is. And I think it's a lot of wearable metrics that you get, not just sleep, but heart rate variability, all the, even activity. I think you probably can get off it. that if you integrated with the Dexcom, blood glucose monitors and insulin pumps and things, could be really powerful.
Tells a more complete story.
Yeah.
Right. Scene Health raises $22 million Series A for culturally focused PACE. So I love this story because Nova's portfolio company, Intis Care, loves to see the PACE market growing. But this is great. Another PACE business. I'm very bullish on the PACE model and love to see it being expanded. With VC dollars. Prior to this, Kaiser Permanente launched a PACE business. Welsh Carson is pretty deep in the PACE space. So
and it's in LA.
Yep.
And then focused on Asia Pacific Island population. So I think that cultural focus really is helpful in elder care, just because you're communicating to them in the way that they have lived their whole life. And it's hard for me at 54 to change how I think about things. As you get older, it's hard to change. So meeting them where they are around a culturally competent thing, I think makes sense.
Yeah, it's great. So love to see that. Alloy raises $16 million Series A to expand Menopause care platform. So Menopause, definitely, as far as women's health.
Yeah, it's the hot
It's getting all of the attention right now.
Yeah. We just passed in Foundry on a Menopause pre-seed investment because we were nervous. There's
too much big dollars.
A lot of big high-profile people and investors and money. I love the team, but we just decided to hold off. And then this comes out a week later.
Yeah, so. It feels like the space is going to be very competitive, well enough capitalized.
There's a huge market opportunity, and so there's plenty to go around. I mean, they estimated at $17 billion globally.
Sure.
But there's a lot of big players in it, and so an Alloy, I think, will be a good addition. But I think it's also going to be competitive.
Yeah. So this was a kind of, an interesting story in the VC space.
Yeah, it's a little bit inside baseball stuff, but I think worth just touching on, especially for the founders or management teams or people that are thinking about raising capital.
Yeah, so this is from Wall Street Journal Pro Venture Capital section. The headline is "Most venture investors want their startups to go public, not this one." And this basically is a tale of how important it is to really think through the scenarios of your term sheets and your deal sheets when you are giving out preferred, when you're giving out rights to block transactions and things of that nature, because when it is time to actually go to a transaction, and you need to kind of see what do you need internally, rights-wise, in order to be able to move forward with it. You may find out that one of your investors was not somebody who you were very aligned with throughout this process, and then you can't actually get the deal done. Yeah,
so this company, Orion Biotech, they took in a strategic investor from Alcon Research, which is very common, whether I don't figure it was a C or D round, later stage round, and maybe a roughly $100 million round. And Deerfield is the kind of lead investor, very large multi-stage venture capital firm that I think you're co-invest. We know them.
Yep.
And they're good. But in this case, they brought Alcon in, and in every preferred, one of the reasons it is called a preferred is there's other features, other voting rights, other aspects of the preferred. And there's a section called protected provisions where you need to get a certain threshold of that class of stock to agree to something if you want to do A, B, C, D. Sell the company, raise money, and go public is one of those. And you can set the threshold at different levels. It might be 50% would be a normal majority. You could have 60%. You could have 2/3. They set it at 2/3, and Alcon has 1/3. And so you can't get to 2/3 unless you have every other person agree.
Yeah.
And they don't want this company to go public because it would be competitive, or they've gone sideways, or they don't want it to. So they're blocking it. The company is suing, and it's not in court yet, but I think it's a pretty straightforward lawsuit that they lose. I mean, the retrovisions are pretty clear, and it's very common. It's not like a unique thing. It's almost a cautionary tale.
It's a cautionary tale. It's a cautionary tale for sure. I mean, and probably one that you and I don't think about a whole lot because we're so early in the stack, right?
Yeah.
That mostly by the time something gets to C or D, at best we're trying to, throw in on the pro rata. We're usually not deciding an exit if a company makes it that far in their capital, stack. But
I'm worried about the the Series A or B.
That's right. That's right.
And there's the same kind of dynamics in that, but usually you're much more aligned.
Yes.
When you
Usually
raise
much
money
more
or
aligned.
whatever.
Usually much more aligned. AI investments are booming, but venture firm profits are at a historic low. One of my buddies in one of my group chats took a screenshot from this article and
the
sent it over.
deflated balloon is kind of good.
Yeah. No, not that. It was this chart here
yeah.
that shows sort of the decreased cash flows and talking about how it's at an all-time low. And I hadn't read the article, but my response to him was, I hate to say it, but I think Trump probably makes this better. And then, like, right under this chart in the article, it says some venture capitalists say hope for change is that the incoming Trump administration might loosen regulations and spur more deal making, in part by installing business-friendly regulators. But yeah, I mean, I think that's the bottom line, right? We've been, since COVID, we've had two real difficult things to fend with in this industry. One, the Fed fund rate going from 0% to 5 plus, 5.5, 5.75, depending on how you slice it. That's obviously problematic because it shifts a whole bunch of capital out of our space and into fixed income. So that was not good.
And our investments, when they do well, they pay a whole bunch of money in 8 years.
Yeah.
And so now you have to discount that at a much higher discount rate.
Yes.
Obviously.
Yes. And then the second thing is you couldn't do M&A.
Yeah.
The IPO markets were closed, and look, fair play. Too many people tried to shove SPACs out during the pandemic. So there was obviously that pendulum had to swing back from all that nonsense. So, fair play to that. But IPO markets, obviously very, 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 very slow. And then M&A has just been challenged and blocked left and right.
Yeah.
I mean, that Adobe Figma deal still looms over the industry, right?
Yeah. Well, and we just talked about the Oura Ring. I mean, it's a profitable business with a lot of revenue, global, $500 million in revenue, global. 20 years ago, it would have been public.
Yeah. And they're taking a Series D investment instead.
Yeah. Right.
It's just like, what's going on?
It's not an efficient capital markets.
No.
So I think the headline of the story is we're seeing activity and up valuations, and it's getting more healthy again, at least in AI, but we haven't seen a lot of distributions. And there's hope, but hopefully we will see it come to fruition.
Dr. Oz is named to lead the Centers for Medicare and Medicaid Services. And Trump says that Dr. Oz will work closely with RFK Jr.
Yeah. So I don't know how I feel about this. I mean, he is a physician leading CMS. I like, but there's a lot.
Do you remember we had Dr. Oz at Health Further?
Yeah. He spoke at the
he was on the Share Care panel.
Right. Yeah, I think he's a good speaker. All the picks, and I'm stealing this from Emily, but they all are like really health wellness, even longevity people, and not so focused on the traditional incumbent healthcare where you're treating people in a hospital.
I mean, dude,
which is good.
I have no problem with this.
Exactly.
Like, my buddy Ovik, in our Aspen, group, he was recently with Dr. Oz and had a picture of him, and I'm like, the dude looks fit.
Yeah,
he looks great. He's got a t-shirt and shorts on, and I'm like, that guy looks fantastic.
Right.
I mean,
and he's going to be an advocate for fair treatment for physicians.
That was the first thing that I thought of. Emily and I were talking about him and saying, okay, well, what's going to be his posture? And of course, the first place to go was, to me, this was not a crystal ball thing. It was more like, okay, if you're trying to be contrary to what the Biden administration did, which I think is kind of principle number one.
Yeah, right.
An obvious pattern matching opportunity here is we've got a physician, right?
Yeah.
Who is heading up CMS, and the Biden administration just spent years diverting physician pay to all these other areas, community health workers, behavioral health, on and on and on and on and on. And, meanwhile, we've got a dearth of physicians, and the space is shrinking.
Especially in some of the most important but least well-paying specialties.
That's right. Yeah. Not dermatology.
Yeah, right. Yeah. I forget when we cut that or not. We might get to that. But I mean, primary care or geriatric care.
Yeah.
I mean, there's a lot of specialties that are going to be in huge demand that we just don't have a lot of people going into.
Yeah. So yes, I do expect physician pay to be kind of a key focus area for
But I don't
Dr.
think I was talking to a guy over the weekend who's really worried about kind of policy around contracting and reimbursement rates. And I don't think that Dr. Oz is going to change that direction that much. I mean, I think Medicare Advantage is already on track to get more and more of the share. And Medicaid is taking care of kids and poor people. I just don't think that our policy around that is going to change that much.
It's not going to be politically astute in any way, shape, or form to make huge, massive, sweeping changes, especially in year one at the intersection of providers and payers.
Yeah.
Pharma is a much safer area to target and kind of go deep in because it doesn't touch as much of the general public and it doesn't employ as many people. Providers employ a lot of people.
Yeah.
You know, you're not going to go around screwing with that. And the providers touch the patients and they are vocal when they talk to the patients. Yeah. And so I do not expect a whole lot of changes that will drive the industry broadly to think negatively of Trump in year one. That just doesn't make sense to me. You know, they have to line things up with the mindset that the midterms are around the corner.
Yeah.
You know, so
yes, they have to get quick wins that are largely popular.
That's right. That's right. Quick wins that are largely popular. That's right. Story from The Guardian. Okay, this actually, I was surprised. I didn't hear this news. I was busy all day today and found this. But Trump is likely to choose surgeon and writer Marty Makary as FDA chief.
Yeah, so he hasn't actually chosen it yet. This could be wrong, but I think it would be a great pick if he does.
Man, Marty is like the real deal. So he came to, I guess it sounds like he did not go to your fellows class, but he went to our fellows class. Yeah. This guy is sharp. This guy is really, really sharp. And yes, he is contrarian, but he's sharp.
Well, and he brings like reams of evidence. I mean, so I bought his book this morning. So of course I haven't read it yet, but it's called Blind Spots, and it's talking about the medical healthcare profession of being a physician and things that docs have done that really don't have evidence, or now we have studied and they have negative effects. So the example that he was citing just on the cover of the book is peanut allergies. Mm-hmm. And for like 20 years, pediatricians were recommending that parents keep your kid away from peanuts for the first 3 years with good intentions.
Sure.
But there was no study done. And then when they did a controlled study where they introduced peanuts and didn't introduce peanuts, if you keep your kid away from peanuts, it's 86% more likely that they'll have an allergy. And so the well-intentioned thing that physicians did that seemed intuitively to make sense actually made it worse. And so I'm going to put in the show notes a link to the book. It just came out a month ago, so pretty new. It's his third book, but it seems like he has a lot of data. I haven't read the full book, but a lot of data behind it.
Look, he is contrarian, but he's well researched. He's thoughtful. He communicates well. He's funny, which I think is helpful. Is important and helpful. And
he's at Johns Hopkins. I mean, it's not that much better you can get than that.
Listen, I'm just telling you, like, if this actually goes through, this is pretty good. This is pretty good. So yeah, I'm pretty excited about this. Elon Musk and Vivek Ramaswamy, the DOGE team, wrote an op-ed in the Wall Street Journal, which I think is so interesting, right? Because like they're always like railing against, the Journal. They rail against the Journal, generally speaking, but they wrote an op-ed, which I think is actually good faith. This is good faith to see that they're not solely communicating on X. But they basically talk about this is their plan to reform government. And I'll just tell you, my quick read of it is basically they are clearly not a real department. They're effectively like a think tank where they are going to do research and they're going to come up with recommendations, and they're going to make those recommendations. But, unlike most think tanks, they have a direct line into the president of the United States.
The president and the cabinet member of whatever department that they are talking about at the time.
Yes. Most think tanks, they have to throw events and they have to, pass their stuff off to lobbyists and all this other kind of stuff.
Yeah.
No, Elon and Vivek are just going to mainline recommendations directly into the White House, and say with priority order, write an executive order for this.
Yes.
Right.
Yeah, that's right. And I think it's worth reading. It's not that long because the way they frame it is really interesting. Right. So they are anticipating the pushback they're likely to get and then preparing for that. Right. So there is lots of existing infrastructure in DC and across the country in all of these departments. You can pick any one, right? Like EPA, Department of Education, Department of Defense, et cetera. And they are prepared for how they would make a case that is reasonable to an American citizen of why we should cut these programs or these jobs. And they're really framing it around the Chevron doctrine, going away, because that gives them, and they quote 5 or 6 Supreme Court cases. It gives them, I think, the legal status to say, okay, if this regulation wasn't passed in law in Congress, then there's no legal basis for EPA or Department of Education or DOD to do it any longer.
Right.
And whether you agree with that or not, I think it is not two kind of social media guys just flying off and saying, we're going to cut all these people. They have a pretty well thought out legal plan of how they can implement this. Mm-hmm. So anyway, I was not expecting it to be that grounded in the legal and all the infrastructure stuff.
Well, it's not on X.
Yeah, right, exactly.
Yeah, they speak to the audience that they're designing for. So,
right.
Anyway, it's worth a read. It's worth a read because I do think the reality is they will be active. If anything, Elon has proven is he is prolific in his activity, and I think he's real when it comes to what he's going to do with DOGE.
Yeah,
I have no idea when this guy sleeps though.
I know.
2.3 million jobs, the federal workforce in charts. This is from the Wall Street Journal and shows that Trump and Musk want to slash government employees. 70% of civilian workers are in military-related agencies.
Yeah, so I wasn't sure if this story would be worth talking about or not until the op-ed came out.
Yeah.
But now that it has, I think it's pretty interesting. It shows and really Bush started this executive order thing. So it's interesting that they, I believe the Wall Street Journal knew the op-ed was coming, and Bush was the first president to really start using executive orders, and then everyone has sense. So, it started with a Republican, but both sides have done a lot of executive orders that then end up creating infrastructure, and it shows where the employees were brought in, and then if you go down, it shows it by department and how it's changed over time. And it's pretty interesting. So if you're going to try to cut costs, the VA is the biggest employer. Now there's a lot of healthcare. That's all healthcare. And taking care of veterans is going to be hard to cut.
That's hard.
But that's the number one employer.
Yep.
And then you go down the list and you can see
Homeland Security, Army, Navy, Air Force, Defense.
Yeah, one of the things they said in the op-ed is the Pentagon hasn't been able to pass an audit for 7 years. So they don't know where money is spent.
Wow.
And then you see they employ a lot of people. And we want our defense to be really strong, but I think it is probably good to be able to do an audit and know where things go.
Yep. No question. Trump picks Brendan Carr as FCC chair. He vows to challenge a big tech cartel. I've said for a while, just tracking the vendetta that I believe many conservatives have developed specifically with Google, but maybe you could say more broadly with big tech. I really saw it fundamentally flare up during the pandemic because as many people were sort of against the vaccines and all the tagging of content and the misinformation and the fact checking and the throwing up a COVID vaccine, overlay on a video or whatever. That kind of really started it. And then people started analyzing search results and what was kind of coming up.
When Musk bought Twitter, he released all the Twitter files.
Then there was the Twitter files that happened. So, there's a lot of animosity there, from the right as it pertains to big tech. It's interesting. Big tech has not made a whole lot of friends really at all. But I actually think that the right is going to be more harsh.
Yeah, it's interesting.
For big tech to deal with.
Probably
specifically Google.
The only thing that the Republicans and Democrats can agree on is they don't like Google.
Yeah,
that's almost one of the maybe big tech in general, but that's and maybe TikTok as well. So I think of the few things that there's broad consensus, it's that, and so I think there's going to be some changes there.
Yeah. Matt Gaetz rewards withdraws from consideration as Attorney General. Seems pretty predictable.
Yeah, this is good. The faster, the better.
Well, but also, what was the calculus here, right? Was it to throw this guy so everyone just focuses on him while you then you breathe a sigh of relief and then you're not paying attention to who gets brought in next, right? I mean, it's hard to really say because it just seems so ridiculous, given the nature of the accusations that he was defending himself against. I mean, I mean, sex with a minor, dude. That's right. That's like,
and he paid. I think the allegations were he also paid for sex.
I mean, I hate to say it, but stories like that, I just kind of turn away from. So I don't know the details of it, but he just seems absolutely just not serious. Just like a not serious, candidate for the job. And so to me, it felt like there was some calculus, like, okay, we're going to sacrifice him real quick, and then that will help us get somebody else in.
Yeah. I don't know all the behind the scenes stuff, but it's something like that. He also was about to go into his investigation in the House the day before. Right. So it may have been almost like a favor. Let me get you out of that, and then you can resign from the House or whatever, maybe a delay. But either way, he's not going to be Attorney General, which is good.
Yeah. Gensler is leaving basically once Trump comes in office.
Yeah, which we kind of knew, but
now it's official.
Good that he has announced it. On Inauguration Day, he'll be done.
And Bitcoin runs.
Yes, that's right. Which is, good for the Bitcoin holders. But I think it's time to have someone just create a policy around how should we treat these things.
Yeah, this is going to end up being such a black eye for the Democrats that they're not going to be able to get over for a long time because crypto is starting to get useful.
Yeah,
Vic. It's like the tech is really getting there, and the idea that we sent off companies that could have been the leaders in this to other countries where they were willing to create regulations for this, and the technology was basically inevitable. I mean, it's like, what were we really talking about here? We're talking about SWIFT, we're talking about ACH. Has anyone looked into what the current financial infrastructure of the United States is? It is trash.
Yeah. It
is absolute trash. And everyone's so busy thinking about funneling whatever funds to North Korea or something. You're missing all of the innovations that are happening in payments.
Yeah, and the existing systems are also used for nefarious purposes. I mean, it's not like this bad stuff didn't happen before crypto.
Yeah.
So any technology can be used for good and evil, and that's certainly true about blockchain and crypto. But we should control it, regulate it, have it in the U.S., and steer it towards the positive.
This position that it was just inherently bad,
it's wrong.
Awful. Yeah. Awful.
Technology is not inherently anything.
Apple faces a $3.8 billion antitrust legal claim over iCloud. What's going on here?
There's a whole bunch of I think we have 3 stories in a row here where the Democratic, one is a European story, but the Dems are trying to take out all of their thoughts before they lose power.
Yeah.
It's not going to actually happen. So anyway, I'm jumping to the Google one. This is in the UK. They lost their appeal, so they're going to have to pay.
This seems ridiculous.
What part?
I'm sitting here, I'm like, Apple customers are owed nearly £3 billion as a result of the tech giant forcing its iCloud services on customers and cutting off competition from rival services.
Well, they do you can't use another cloud provider. That's what they're upset about.
What do you mean? I've got Dropbox on my phone. I've got Box on my phone. I've got Google Photos on my phone. Okay. I use those all the time.
I don't have an iPhone, so I don't know.
I use Google Photos to back up the photos on my phone. I don't use iCloud for that.
Okay.
I have no idea what this is about.
Well, that's the argument from the UK that you can't do that. You have to use iCloud.
Okay. This is stupid. That's not
I don't
true.
have a frame of reference because I don't have an iPhone, so I don't know.
I mean, you trust me,
but I trust you. Yeah.
Okay. Yeah. I actually don't use iCloud for like anything. I don't use it for mail. I don't, and I pay for it. You know, it backs up like my apps and it backs up my overall phone.
Yeah. So you have to pay for iCloud even though you don't use it.
Well, no, I pay for it willingly because like, I mean, I use it, but it's not like my intention. I don't use it for anything for business, right? Mm-hmm. Nothing for business. It doesn't back up my photos. So I'm like, I've got all sorts of optionality. And in the Files app in Apple, they load up all the other cloud storage services. I'm talking like Microsoft, Dropbox, Google Drive, all of them sit in a menu, and you can turn them on and off. Like what is this lawsuit about?
But I think maybe it is. You still have to pay for iCloud even if you don't use it.
That's the Files interface.
Can you stop paying iCloud?
I mean, yeah, I think so. I don't think you have to have iCloud.
Okay. Well, I mean, the argument is that they cut off competition for rival cloud services by forcing people to buy iCloud. Now, I don't know.
I mean, this, you know.
But it happened in 2015. They have appealed, and they have lost the appeals now.
Okay, whatever. I mean, this is the kind of stuff that, you know, it's really interesting, right? Because there's all these different dimensions of politics, right? There's all these different dimensions of politics. And there are certainly dimensions for me where I just can't sort of abide by the what the Republicans sort of stand for, right? There are dimensions.
Social issues. That's how I feel.
Mostly on this, mostly social issues. Mostly social issues. This tech stuff is getting like ridiculous. And I realize we're talking about the UK, but the UK tends to kind of align with the Democratic Party in the United States when it comes to like how they're going to regulate tech. They tend to be pretty aligned in that. And this kind of stuff is just stupid. You know, I'm all for finding real places where companies have been anti-competitive. This is not one of them. Yeah. You know, this is not actually one of them. To me, this just feels like you're just trying to get $4 billion of taxes out of Apple.
Yeah. Yeah, I don't know. I didn't have that reaction because I don't use it. So I don't really, like, it's hard for me to say, but I believe you.
It just makes me mad because I don't want the Democratic Party or progressive-leaning political parties to be anti-tech and anti-business. That is a losing formula. You are not going to win elections. You know what I'm saying? You're not going to win elections being anti-tech and anti-business. This is not. Yeah, that's right. It's not where humanity's heading. Like, it's not. Stop doing it.
Yes.
And the reason why it makes me upset is because, like, you're sacrificing social progress.
Right. Yes. you lose your ability to do anything on the social program front because you do these stupid things.
Lose the moral high ground.
Yes.
You know, you might have better ideas socially, but your business ideas are total trash.
Yes. Total
trash. Meta fined $843 million by EU over marketplace ads platform.
They do this. They share data across their platform, Instagram, WhatsApp, and I think everyone knows that, but the EU doesn't
Allow it?
allow it.
Doesn't allow, even though they own all the different platforms, sharing data between the different platforms is not allowed.
They can't tie their ad platform
Across
all those, which is not. It's not what would happen in America.
Let's just move on.
But then the next one is the DOJ put in their request for remedies in the Google case that they won.
Okay, and this is Biden's DOJ.
This is Biden's DOJ. And they're asking for the breakup of Google to sell off the Chrome browser and also provide enough data on all the search metrics so that a competitor could spin up another search platform.
Okay, so who gets to buy Chrome?
I don't know who would buy Chrome.
That's what I'm saying. Who buys Chrome? Because like,
Chrome
how does
is
Chrome
not-
make money?
Chrome doesn't make money right now. I mean, Firefox.
It's a data hoover.
Yes.
It sucks in data.
Right, but if you can't use that data to power search,
See, dude, this is the kind of stuff that I'm talking about.
so they're going to spin it out, and who can buy it? I don't know that. I can't think of anyone who would buy
The only
it.
thing to talk about with Google in terms of spinning out is YouTube.
Yes.
That is the thing to talk about. Okay, and I'm not advocating for it. I'm just saying if you're serious,
Yes.
you spin out the thing that is bigger than Netflix.
Yes. Yes. YouTube is a very strong company on its own.
1,000%.
And it would be a very relevant competitor in the space. And then it would create all kinds of other stuff.
Dude, it would immediately be the biggest
It'd be the biggest
content company.
Yes.
Immediately.
Yes.
Right. So Chrome, this is another one of those things where it's like, if you don't know how the business works and you don't understand like what Chrome actually is, they might be like, oh, that's kind of cool because they have like all these downloads and have a pretty big user base. It is the biggest browser, in terms of install base, no question about it. But like, how does it make money?
It doesn't make money now, but more importantly, there are competitors.
Of course,
Like
and
Firefox-
it's growing.
Well, yes, there are competitors to make it not necessarily important to spin it out.
Yeah.
But Firefox is struggling to make money, and how they make money is they partner with Google
Yeah.
to get paid to send all the search business there, and that is the main thing that they can't do any longer. So that's definitely going to be in the remedies that you cannot. So it's going to be worse for Apple. Apple can no longer get the billions of dollars they get to send all their search to Google.
Well, I
Chrome,
mean,
Chrome and Android both.
I'm not going to cry over Apple, losing a revenue stream.
Yeah.
They're
Well,
Apple.
the important thing I think is that, at least in my recollection, Chrome and Android both were defensive things
Yes.
to make sure that Google didn't get disintermediated by
Apple and Microsoft.
Apple. Right.
Yes.
And so they're kind of loss leaders. I mean, they are
That's right.
valuable.
So why are we talking about them?
Yes.
They're not the thing to talk about.
And if you spin it out, I don't know who's going to buy it. People are talking about OpenAI buying it. Okay. Maybe because they have too much money, but
Okay.
I don't know how that helps.
I mean, it gives them an install base. It gives them an instant install base.
Yeah. Right. Yeah. So anyone who wants an install base could, but then they're going to use
But how is
that.
how is that fair?
They're going to use that to
You-
monetize some other business, which is what Google's doing now.
Yeah, and also you're gonna give one competitor in an undetermined winner space Chrome.
Yeah. Right.
Yeah, really. That's what you're gonna do. It's just this
Yeah. It doesn't make sense. So I agree with you that
three stories in a row that I'm just like,
Yes.
God, get the government out of tech.
Yes.
Seriously, this is like,
They don't understand it, and maybe it needs to be broken. I think Google will be attacked by the
they
Republicans.
don't do the things I want them to do, right? The things I want them to do actually protect users with their data, protect kids from, getting all these crazy things on Instagram. Like, do the real things.
Yes.
Protect the citizens.
Yeah. So I think the Republicans are going to throw this out, but they'll come back at Google with something else. I agree that they don't like Google. I think it'll be different.
On to health systems. Michigan hospital loses Medicare funding. That's crazy. and plans 248 layoffs. I mean, wow. I mean, basically, you lose Medicare funding. Yeah, you're going to plan a lot of layoffs, right?
Yeah. So in Pontiac, Michigan, Pontiac General Hospital got this notice that I had never seen before. I've been doing this 25 years, where Medicare is no longer allowing them to see new patients and bill. Now, the patients that are in the hospital can continue.
Mm-hmm. But no new patients.
No new patients. And so they laid off 248 people. They're claiming that this will be a temporary, this hospital said they think this will be a less than 6-month layoff. But I've never seen this before. I think you have to do a lot of really bad things to get to this point.
So I'm making a bit of a leap here based on the name of the hospital, but it sounds like it's a safety net.
I think so.
Essential
that's
hospital.
What I believe it is.
Which is even more sad, right? Because this is
Those
hospital of
people
last resort for many, many people.
Right.
And I think you're right. I don't think that CMS would cut off payments unless there was something really wrong going on.
Right.
At least you hope, right? You hope that everyone involved would understand the situation here. But safety net hospitals are up against a lot, truly up against a lot. The economics do not work very well.
Yeah, that's right. But you can't, and I don't know that they did.
We don't know the deal. We don't know the details.
You can't cheat. So if they did do things that are not appropriate, they can't do that.
Yeah.
And,
yeah.
But yeah, it's not a good.
But it's also the kind of thing where you would hope, rather than punishing that community, you find a way to punish the administrators, and how might you quickly replace those administrators if in fact it is a safety net hospital where there's no other options, right?
Yeah.
Kaufman Hall, big consultant, performance stable but high labor costs challenge hospitals.
Yeah, so volume and acuity continues to be really good across the country. Of course, particular hospitals have different situations, but for the most part, we have really strong patient volumes and pretty good acuity levels. So the revenue side is fairly strong with health systems, but the labor costs are, I think it's 86% of the overall spending. And it's growing roughly at the rate of inflation, a little bit over inflation.
Mm-hmm.
And the reimbursement amounts are not changing at that same rate. So they're just systematically losing ground.
Right.
And Kaufman Hall studied this, we have been watching this since the pandemic. It's not surprising, but it's still the same.
Yeah, it's becoming a sticky problem for sure.
Yeah.
Mercer, big employer broker. As costs rise, employers are pursuing benefit enhancements. So it sounds like they're really looking at the important role that GLP-1s are playing in healthcare and how that's impacting cost.
Yeah, that's right. So that's the major driver of costs that Mercer found. And it's pretty interesting. Most employers are willing to pay for reimburse for allow GLP-1s if you have diabetes. But when you go to obesity only, they're not willing to do it. And so that's where the fight is now, or that's where the debate is. That and I think we might have a story later with the actual drug companies are trying to get out in front of that and educate employers about the value over a medium to long term of getting obesity down. But right now, they're not so far allowing that for that use case.
Employers get pressure to pay for drugs like Wegovy.
Yeah. Lilly and Novo Nordisk are investing in marketing, education, people, what you used to call physician education.
Yeah.
They're sort of taking that playbook and they're working it with employers now.
Yeah.
Which I haven't really seen before, but it's such a big revenue piece for them.
It's a big fulcrum.
Yeah, that I think they're investing in that.
And it's really about, are you going to cover it or you're not going to cover it, right?
Yeah,
I mean, and that has massive...
And teaching them why they should cover it.
Yeah. Which is really sort of a health economics play.
Yeah, that's true. And I think it's also true that there's going to be a lot of pricing pressure. More these aren't impossible to create competitors in.
No.
I mean, we see people compounding it right now.
Of course.
So I think they're going to teach employers how valuable this is at the same time that they're getting a lot of new entry from other competitors.
Yep. Fair play. 3/4 of U.S. adults are now overweight or obese. Vic, is that you? It's definitely me.
It is me. Yeah. I'm on the edge. I'm
not.
a BMI of 26, which is, close to obese. It might be the one before obese.
I'm going to tell you mine. Hold on. I know it's over 30.
Yeah.
I know it's definitely over 30.
Even though you're in the best shape of your life, probably, or maybe not when you were 25, but
yeah, I'm in decent shape for sure. Oh yeah. Here we go. Okay, 32.3 is my current BMI, and at last weigh-in November 19th, I was 251.
Yeah.
At 6'2". So yeah.
So the definition maybe needs to be worked on.
I mean, look, it's just like
muscle is not really counted
No.
in a way that, like, my dad, who's a little shorter than me, played football at Harvard.
Yep.
He avoided the Vietnam draft because he was obese, as he was the starting running back at Harvard his junior year. So it just doesn't make sense. And it's been like this forever. I mean, like, why wouldn't the Army or whoever the draft was, and he was happy to not get drafted.
So
but
this is one of those things that you're just like, it is 2024, about to be 2025. Are you serious?
Right.
Like, are you
Can't
kidding
we
me?
do some other measurement that would make more sense?
Like, because
I will say, I walk through the airports because I travel a decent amount, and there's plenty of people that are obese, and however you define it, they're obese.
No, look, there's no question about it. But I guess here's my problem with it. Okay. It entirely focuses on the number on the scale.
Mm-hmm.
Okay. And I think that there are many people who maybe they don't love cardio. Okay. But they might really dig weightlifting.
Mm-hmm.
They might really dig the idea of just getting strong. And they're not encouraged to do that. And it would really help their health a lot.
Yeah. There's a lot of people,
if they turn,
including me, that need to do more strength and less cardio.
If they turned fat, I need to do more cardio than I'm currently doing. But if you turned that fat mass into lean muscle mass, like,
the overall health would be much better.
Win. It's a huge win. And I guess it's just we're not creating a landscape of metrics that allows us to meet people where they might be. You don't even know where they are. But I think there's a lot of people who maybe are obese with, a very unhealthy body fat percentage, right? Because I think that's the caveat.
Yeah.
It's like, yes, you're obese with a very unhealthy body fat percentage.
Right.
Who, if you said, hey, let's go lift heavy stuff, they might be like, that sounds cool.
Yeah.
It might be hard, but it's more fun than like running 5 miles or whatever.
Yeah.
So anyway, to me, those are the kinds of unintended consequences that we don't realize when we only focus on the number on the scale.
Yeah. And I think you also, you just lose credibility, right? When
that too.
You and I are both obese and we're very
and I don't
focused
care.
on our health. And so I don't care. Right.
And I don't care.
And so then that just loses
and
the
I probably
power.
should care more. But I don't because it doesn't tell me anything.
Right.
Yes. Yeah, the metric doesn't tell me anything. Lilly sues U.S. to change hospital drug discount payments. This article was in the Wall Street Journal, and you could tell it's not in Modern Healthcare because either the headline or the subheadline would have had 340B in it. But they just talk about drug discount payments for hospitals.
Yeah. Johnson & Johnson a couple weeks ago, Lilly this week are attacking the 340B program, and I don't blame them. It has good intentions when it was created to get medications to poor people that need it.
Yep.
But it has grown in a way that it's become a funding source for
nonprofit
hospitals. And I don't think that was the intention. And certainly it's being challenged. And so I think it's going to be that's going to be one of the topics for the next year in the Trump administration.
It just goes back to that conversation we were having last week around, the robbing Peter to pay Paul kind of thing, and I do sympathize with nonprofit hospitals because they do often, not always, but often have a burden that many for-profit hospitals don't necessarily have in terms of the payer mix that they have to accept and the things that they have to do by their charter and by expectation of the community, et cetera. You're a nonprofit, right?
Yeah, but let's solve that more directly.
Right. And I realize I'm talking about something that's a macro level thing and is not an easy thing to do when you're fighting in the trenches on a day-to-day, week-to-week basis. But somebody has to try to hit the reset button on this thing, because we're going to keep having these ridiculous turf wars that, are not really any of them getting at the core issue.
Right. Yeah. I mean, I would be very happy if there was some deal that changed 340B dramatically, but then cemented the raising of the Medicaid cap at commercial rates. Because that really, I think, goes much more directly to, if you're serving Medicaid patients, by definition, you're in an area that has a different economic model than other areas. And it should be reimbursed higher because we need more people covering that, more systems covering that.
Commure rolls out AI scribe for Tenet Healthcare after year-long customized build. So starting off our AI rundown, Commure recently acquired Augmedix.
Right.
Like a month and a half ago or something like that?
Yeah.
Commure is General Catalyst's big tech platform play. Augmedix had already signed HCA, and now Commure on the AI scribe side now has Tenet. So two largest for-profit hospitals now under contract with General Catalyst's Commure.
Yeah, and they didn't give a lot of detail, but it looks like Commure has built a customized scribing system for Tenet.
I mean, yeah.
And
but
so
why'd they buy Augmedix?
Right. Well, I think what I was going to say is a combination of those two, whatever they build for Tenet and Augmedix, is going to be a pretty strong competitor and pretty good product in the scribe space.
Yeah, I mean, Augmedix, once we dug into it, was a pretty small cap, publicly traded company. I mean, sub $200 million market cap. Yeah. But they were the one racking up all the names left and right. And so this is a really interesting potential angle for Commure to get past the Epic challenge in terms of breaking into the health system space. Doing it with the AI scribe.
If you get the physician notes, first of all, it's before you get into the EHR.
Right. That's right. You're first.
And then you have a lot of what you need to do revenue cycle, to do the referrals, to do a lot of things.
Yeah,
so it's a pretty good place
first. You're first if you're at the listening layer.
Right.
Yeah. Our friend Ambar Bhattacharya from Maverick Ventures put out part 2 that he does along with some of his friends of his reimagining the healthcare delivery journey with generative AI. So he does these great 4x4s, sort of on the vertical axis at the top, technological simplicity at the bottom, technological complexity, left to right, visionary stage versus signs of early adoption. And he and his friends do a great job of laying out the different categories and also tracking progress kind of from episode to episode. So I just think Ambar, I've told you this before, he's the first person before ChatGPT even came out to, tell me, hey, AI is going to be a massive player in healthcare. So he's a person who I really trust, and I want to make sure, we've had him on the show. I want to get him back on the show, but I want to make sure we're sharing his roadmaps with folks, because I think they're unique.
Yeah, and so the first one kind of introduced this 2x2 matrix with, obviously if it's relatively simple technology and early people are adopting it, that's the best quadrant. But now with the update, it's really powerful to see, like, okay, how is it changing over time?
Yeah.
And so, I think he does a good job with this.
All right. NVIDIA's sales soar as AI spending boom barrels ahead. What was the quarterly revenue in their recent quarterly investor call?
$37.5 billion in a quarter, which is incredible. I mean,
It's just like, how do you even wrap your head around that?
yeah. I mean,
$37.5
up
billion of revenue.
94% from last year. I mean, so it's a huge number. It's also growing at not 100%, but almost 100%. And I think they have shortages. So like, it's not like they could sell more. They just they can't make enough of the, we call them chips, but they're like the size of a coffee table.
They're huge. Yeah, they're huge. Just what an incredible company.
Yeah.
This NVIDIA has become.
Yeah. And then the next story is they're doing a really smart move in robotics.
Yeah. Yeah. The Jetson Thor.
Yeah. To not create their own robot, but more empower all of the robots.
They're building platforms.
Yes.
They're building platforms for everyone else.
Right.
And they just want to be the platform builder.
Yeah. Which is great. I mean, selling picks in the gold rush is a good strategy.
It's incredible what these guys are doing. I appreciate you bringing this story to the table. New AI entertainment studio gets backing from Peter Chernin and Andreessen Horowitz. So this is an AI first content studio.
Yeah.
Right. So we're not trying to retrofit. We're not trying to, explain to writers why AI is good.
Right.
We're just AI first.
Yeah. And they're going to do movies and TV shows AI first. It just is going to be a catalyst for the whole industry. I mean, once this is out there and then they have their first hit show, everyone else is going to have to follow. And it's going to be, you either adopt AI across the whole thing or you get left behind.
I think the thing I am thinking about here is how smart it is going to be to work on the supply chain, your AI supply chain to create this content. And then once you've worked on your supply chain, the volume you're going to be able to put out. I mean, we already are like drowning in content. It's just so much right now. Can you imagine when this becomes the standard? AI first studios are the standard. This is the first one that we're hearing about, but Vic, it's just like, what kind of filters are we going to need?
Yeah, that's right.
Like that, someone needs to start working on the filters right now. That's the thing to work on.
Well, I don't know if worried about, but what I'm trying to figure out is content marketing is probably roughly half of my portfolio, all the portfolio companies, how they get leads.
Yeah.
With the other half being direct outreach or referrals.
Yeah. Yeah.
And there's going to be just so much content. I think you're not going to get benefit from it, or it's going to be very different. It's going to be very hard.
Yeah, yeah.
And so I don't exactly know how to navigate that, but that's what I'm trying to think about from a year from now. We're going to have just oceans of average to slightly below average content, but good enough that it's going to hit your inbox, hit your LinkedIn profile, hit your Twitter feed, and it's going to be hard to cut through that.
I think we can take a bit of a lesson from music. This is where music has diverged from Hollywood, which is the live performance has helped the musician endure, right? And has consequently kept the musician front and center on social media and in terms of like music videos on YouTube and things of that nature. I think content will not be enough if people can't touch or engage with you, right? So I think it's probably going to be content plus conferences, plus convening, plus speaking. That combination will help you differentiate because, the one thing, then we're going to talk about this here, what Dario Amodei, is that?
Yeah, I think it's Amodei.
Amodei, talks about is that AI is not embodied.
Yeah.
Right. So the place where we can where we will really be able to differentiate for the foreseeable future. Now, obviously, we just talked about Jetson Thor and robotics, but but those are not going to be replacing sort of the emotional value that humans provide anytime soon.
Yeah, I think that's right. So my thought is that humans are embodied. We exist in the world. We can, in healthcare, we can put an IV in.
Yeah.
And we can...
And hold someone's hand.
Right. So then the next thing is the empathy of listening to someone and understanding their point of view AI is going to get better at that, but humans are going to be, I think, good at that compared to AI for a long time.
We're good at it in ways we don't even understand.
That's right.
And the fact that we don't even understand it means it's going to be hard for us to help.
It's hard
AI
to
understand
encode it and train it.
Yeah.
Not that it'll never get there, but I think in healthcare, because you have to lay hands on a patient, help them with their care journey.
Yeah.
And there's just a lot of physical aspects of healthcare. And then the empathy side and talking to someone about their cancer diagnosis and what the choices are and seeing how their face responds. Physicians and nurses and caregivers do that in a way that it's intuitive. They don't really fully appreciate.
Right.
And so I think that's where we need to lean in. How we do that in content marketing for one of my startups, I got to think through.
Yeah.
But yes.
Okay, I'm going to let you take the final story here because you put in the work to listen to a 2.5-hour Lex Fridman interview with this gentleman, and you also have read this. So the floor is yours.
Yeah, so Anthropic is one of the frontier LLM models. Mm-hmm. I think most listeners probably realize that. And they really have a different approach from all the other models. And so they are trying to win, but they're trying to win this race to this artificial general intelligence, AGI, in a way that helps humanity in a very broad kind of good for the world, good for our global society point of view. And I knew that before listening to this interview, but I didn't really understand how it was going to be or why I would care. It just seemed like a marketing spin that differentiated them, but was not going to matter. And there were two aspects of this that I thought were really good. One is he defined much more explicitly what he means or what Anthropic means by super powerful AI. Mm-hmm. He does not use the term AGI because it's not defined, and everyone means something different by that, and it's just too nebulous. And so he has 5 or 6 components. Maybe go down because we should read a couple of them, but it is from a keep going. It's from an intelligence, just like raw intelligence point of view, right there. Mm-hmm. The AI is smarter than every Nobel Prize winner in every field, right? So it is
today.
Well, no, this is when we get to his super powerful AI, which he does not have today, importantly.
Got it. Okay.
He's saying roughly 2 to 4 years he thinks we'll be here. But then a lot of people will say we'll get to AGI in 2 to 4 years with the scaling laws and things. And there's a lot of interesting stuff about the scaling laws that we don't have time for. But this article and then the podcast with Lex is the scaling laws are pretty interesting. But he defined what he means by super powerful AI. And so we're not there yet, but it is as smart as every Nobel winner combined in every field and can solve mathematical theorems, write very good novels, create new code bases from scratch. So that's the intelligence level. But it also has interfaces, which I've been complaining about it. What it doesn't have at all today is interfaces to be able to email me or do a blog post or transact on Amazon Mechanical Turk or whatever. Like it can interface with all of those and pay for things. So that's the next thing, that it's as smart as any Nobel, but it can also make a video, post it on YouTube, charge people to do work, and it is functional out there. People call that the term agents, but he's defining it much more like explicitly. And then it can go away for a period of time to do projects. So you could say, I want to address Lyme disease. Mm-hmm. Go research all the different possibilities for Lyme disease, then come back and it will be gone for 30 days and come back with a full proposal of how we would address it. So anyway, he's saying in a couple of years we'll have this. And then the last one that I was surprised about is you can multiply it by millions of times. And so this isn't going to be like this one Claude Anthropic master super powerful AI. There will be 300 million that are simultaneously deployed and can be doing all kinds of stuff. So that's the first thing. He much more clearly than I've heard anyone define what AGI would be like.
Yep.
Because when you just say like it's going to be smarter than any human and going to be hard to control and might kill everyone, that might be true, but it's so nebulous, it's hard to really interact with.
Yeah.
And then the second thing that I got excited about is his culture. He calls it race to the top, which is sort of exposing what Anthropic has learned and challenging others, OpenAI, Gemini, Amazon, Meta, to compete with them in that. So they spend a lot of time, effort, money on determining how the AI is working, like getting inside and understanding how it works. And then they expose that in papers into the world. And that is really helpful in making the models better and making them more aligned and figuring out how can we interface with YouTube so it can post things. And so in the interview, Lex was asking him, well, doesn't that then hurt your competitive stance because people copy it? And he has raised a lot of money, like all these guys have.
Yep.
But he's done it with the full transparency. This is what we're going to do.
Right.
And yes, we will then lose competitive advantage in that space, and that will force us to go find the next thing. And we're going to be transparent about that too, so that if people copy it, it ends up like pushing everyone to shape this new powerful thing in a way that helps humanity.
Right.
And so, I don't know. I have not been a customer of Anthropic because I'm cheap and I didn't want to pay for them. But I might be a customer now because it seems like that's a good thing to do. And so anyway, it's a decent read. It's kind of long, but we'll post it in there.
Well, thanks for that rundown. My understanding, and I'm definitely a layman in this space, but my understanding is that they have the number one model.
Yeah. They have the number one model.
Isn't Sonnet the number one model?
Sonnet 3.5 is the number one model for coding, definitely. And then there's lots of debate about other uses.
Yeah.
But they have a very good model.
Yeah.
It's the number one in some areas.
I mean, if you have the number one model in any areas in the world right now, probably worth listening to you.
Yeah, I think the thing that I was attracted to is he's gonna pull in employees and corporate partners.
Yeah.
More that want to really make an impact, and they'll make plenty of money too.
Oh God.
But it's like a double bottom line thing or something that I think is pretty smart and will be good for humanity.
All right. Well, you've convinced me.
But just one last thing. Of his 5 impact areas.
Yep.
So when we get this in a couple of years, there'll be 5 areas that really change the world. 2 of them are health.
Yeah.
So that's kind of interesting too, that he's not a healthcare guy, but as he just thinks about this, health is going to be really impacted positively. But all of us, all of our listeners, the whole industry, we have an opportunity to benefit from that, but it's going to be a lot of change.
Yeah. All right. Well, you've convinced me. I'm going to find time to listen to the 2.5-hour Lex Friedman interview.
Yeah. When you pull it up, it's 5 hours, but the first 2.5 are him. And then there's a product woman who's also good, but she's the second 2.5 hours. So it looks like 5 hours,
but it's not really.
No, but it is 2.5.
Okay. I'm used to 2.5-hour Lex Friedman interviews, so that's fine. So I will listen to that. I will read this, at least portions of it. And thanks for running it down. It does give me something to think about differently in terms of AI, like giving these more specific examples of what we mean when we say super intelligence, that you can like create a scaffolding for projecting into the future against that, right? And then you can think, okay, well, what am I doing then? What is our company doing then? What are our portfolio companies doing then? What are health systems doing then? What are payers doing then, right?
Yeah. When I started to think about, well, what are the signs? What would happen 6 months from now that would say we're on this 2-year trajectory?
Yeah.
So that we can be more prepared.
Yeah. Yeah. That's interesting.
But without any definition, it's just too vague, like hand wavy, like, okay, we're not at AGI yet, and we'll tell you when we get there.
Yeah.
That's kind of hard.
Yeah. All right, man. Thanks for another great show.
Yeah.
Next week is Thanksgiving, so we'll be recording on Wednesday.
Yep.
But we will be recording.
Yes.
All right. Looking forward to it. Thank you.